And Kate, do you have another speaker for me?
Jacquie Munro.
Jackie, how are things in Australia?
Things are good, starting to cool down, moving into winter.
All right. Well, that's right. You are in the opposite hemisphere as us and therefore have contrary seasons. Jackie, go ahead and get your PowerPoint up there.
Okay.
Jackie grew up in Toowoomba, Queensland, Australia. After 12 years of schooling, she did secretarial courses, as that's what women were expected to do in those days, and odd jobs, including hay baling, working as a jillaroo or a cowgirl, and then worked 10 years as administration officer in the Toowoomba hospital in the psychiatric and a drug ward. While working, she did 10 years of study and finished off with a master's of business administration. She also has 30 years of experience working in the teaching profession as an ESL teacher, and that is teaching English as a foreign language. Jackie started investing in the stock market in her 20s, heavily influenced by her mother. After finishing her MBA, she wanted to learn more about the market. She joined Mad Hedge Fund Trader in 2010 with the support and knowledge gained here. Jackie started to make some serious money. She spent 10 years running her own self-managed super fund and now spends her time helping others learn about the markets and doing what she wants to do. Okay, Jackie, you have until 5 minutes before the hour, and then we hand out our next batch of prizes. And I'm going to go ahead and mute myself, and you have the floor.
Okay, thank you, John, and thank you everyone for joining here at this event. It's great to be here. Hope everybody's well. So let's get into it. So I'm Jackie, and my product is Mad Hedge Jackie's Post. As John said, I've been working with him since 2010. So today I'm going to talk about the precious metal bull market, which has many, many years to run. And I'm also going to tap into the psychology that you need to trade successfully and also to be a successful investor. So let's get straight into it. Okay, so many people always ask me, how did I make money in the markets? So I thought I'd type it down and go through it. So I always use multiple vehicles for one thing. I'll go through that in a minute. I always have a plan. I use patience and resilience, and I've learned that over the years, how important that is. Consistency, extremely important. Taking advantage of volatility, understanding my psychology, and also how the markets move. Determining the best option to use in different types of markets, knowing not to overtrade, and knowing when to add a position or roll or take the position off, and the value of exercise, which we'll talk about later. Okay, so what does using multiple vehicles mean? So let's say the euro, the currency, the euro, is in a bull market and it's going up against the USD. So this is what I would do. I would buy a position in the ETF, EURO. I would pyramid into euro positions in the Forex market. So I'm actually accumulating positions at different levels. I'd buy either a call option, a spread, or leaps, which will expire at different future dates. And then I will pyramid out of these positions at different times. So in the tech sector, here's another example. Say I wanted to buy Micron Technology. I could buy a small parcel in the stock. I could also purchase options. I could also purchase ROM, the technology ETF. So what you're doing is you're effectively multiplying your returns in a massive way by incorporating various vehicles. So you're not putting just all your money into just one instrument by just buying the stock. So you can buy the stock and hold it, but you can also do options and get income. So when that option expires, you've got that income, but you still have held the stock and you've got in at a really good price. Okay, so I'm a really long-term holder of stocks, but I also trade the medium term as well. So here on the right, I bought 300 shares in Commonwealth Bank. That's when it floated in 1996. So the whole total was $6, and you paid it in 2 lots. So the first lot was $4.45, and then the next lot was the balance. So that was $6. So the price of CBA shares as of yesterday in Australian dollars is 123.95 cents. So that's a nice little return there. So, and when we had the 2008 crash, many of the companies sent out share purchase application plans. No brokerage involved. And I bought several parcels of shares when this occurred. So on this date, what's it, the 11th of March 2009, I sent a check of 25,000 because at this time, Commonwealth Bank was priced at $16. So that bought me a nice little extra parcel of Commonwealth Bank shares. And of course, the same was done with BHP and Rio Tinto and NAB and several other shares. So I picked up nice parcels of shares there. Okay, so how can you make money in the markets? So using more than one vehicle at a time. So you could, as I said, you can buy the stock and hold it, and you can do options, you can buy ETFs, you can trade Forex or futures. I learned to trade Forex back in 1999, 2000, which was very interesting. I did several courses, and I used that knowledge in 2008 when the market crashed, and I traded the euro, the pound, the cross rate, the pound yen, and the cross rate, the euro yen. And I made quite a lot of money, actually. So that was lots of fun. So the best option strategies to use, which I believe are spreads and leaps. So in a bull call debit spread, you have 2 legs. So you buy a call option and you sell a call option at a higher strike. So the maximum loss is limited to the initial debit paid. The maximum profit is the difference between the 2 strike prices less the initial outlay, the debit paid to establish the spread. See the advantages, there's lower cost because you're bringing in income by selling a call at a higher price. You've got higher probability of profit, and you've got limited risk. You know your risk when you place that trade. So the importance of exit strategies in debit spreads, you can set a profit target. So you know when you're getting out, when you set the trade, using stop loss orders in case we have a calamity in the market. You can take profits partially, so you can set 2 stop loss levels at different prices, and you could also have the option of rolling it forward if you wish. So there are many different option strategies. There's not just spreads and leaps. So these are just a few of the other ones. You know, things like jade, lizard, iron, butterfly, a strangle, a straddle. But I mean, you really don't need to know about all of these option strategies. You really, you know, you're not considered much smarter if you do know about them all. If you just use a couple consistently, you will still do very, very well. So there is really no single market secret, no single correct way to trade the market. So there's no one holy grail. Those seeking the one true answer to the markets have even gotten as far as asking the right question, let alone getting the right answer. So what do I need to know? Oh, sorry about that. What do I need to know before I enter an options trade? The macro picture. So is the economy growing or is it shrinking? For growing economy, use bullish strategies, calls, call spreads, short volatility plays. For shrinking economies, use bearish strategies, puts, put spreads, and long volatility plays. So think about where the economy is headed next. Next, you want to target good industry fundamentals. So focus on the handful of industries that are booming. Period, end of story, that's your edge. Skip over most of it, seize the movers, the leaders that have the momentum in the new world narrative. And then next, get a clear picture on the micro picture. So you know the economy, you know the industries, now zero in on individual companies to trade. This will be your micro selection. Individual companies return double or triple the returns compared to stock indexes. Market pays a higher implied volatility for an individual company as opposed to a basket of companies. The flip side is you are taking on greater risk trading individual companies. If earnings are amiss, the stock can slide down a slippery slope, as we know. So then hone in on the technicals. So read the chart, and you can use identify patterns and use candlesticks, or you can use Elliott wave analysis, Fibonacci retracement analysis, Wyckoff theory, use technical indicators like RSI, MACD, the MACD, and then purchase the option and or scale into the market using small parcels. Also know your calendar. We've all heard the sell in May and go away. Data in Stock Traders Almanac shows 10,000 invested at the beginning of May and sold at the end of October since 1950 would be showing a loss today. Whereas 10,000 invested on every November 1 sold at the end of April would today be worth 702,000, giving you a compound annual return of 7.1%. So quick recap. So you need to know your macro picture, chuck out most and follow good industry fundamentals, know the micro picture targeting individual stocks, get clear with technicals, and remember your calendar. Okay, so what's all this about leaps? You hear many people talking about leaps, and some people always ask me about leaps. And some of my subscribers say that's their favorite strategy. So it stands for long-term equity anticipation security, and it's an options contract with the expiration dates that are a year or longer. So why would you trade leaps? So it allows investors to benefit from potential rises in a specific stock while using less capital than purchasing shares with cash up front. Okay, so we all remember when COVID hit and the market dropped quite considerably. So here it is circled here. So when all this was happening and there was all the mad media hype about COVID and what to do and what you shouldn't do, was anyone thinking about trading? Was anyone thinking about buying any stock or putting on leaps? I don't think so. I don't think a lot of people were thinking about that. But even if you did, I mean, look what happened. If you'd put on some leaps here in February 21, this is where the market was. So when fear, we all know, fear and greed scenarios in the market, when there's a lot of fear, get in and start buying some stock or start doing some trades. So making money in the market, psychology. The 6 basics of stock trading psychology: managing your emotions, managing your fear, managing your greed. So maintaining discipline is all tied up with developing a trading plan. If you don't follow your trading plan, you don't have discipline. You need to understand the market behavior, how the market moves. You need to overcome your biases, which I'll go into a little bit very soon. And you need to cultivate a long-term perspective. So why do we mess it up? We have overconfidence, we have loss aversion, and we have confirmation bias. So overconfidence, taking unnecessary risks, making unrealistic assumptions about the markets, can lead to a lack of discipline and failure to follow a trading plan. So what do we do about this? We be realistic about our abilities. We seek advice and guidance from other traders. As Matt was speaking about just before, seek out a community and discuss your trade that you're about to put on with that community. Loss aversion. This is a bias that causes traders to hold on to losing positions for too long. How many people have done that? I've done that when I was first learning, hoping that the markets will eventually turn in their favor. This can lead to significant losses and lack of discipline in time management. So be willing to cut your losses and move on to the next trade. I mean, there'll always be another trade. Set stop loss orders and have discipline to keep them there. And this takes out the emotion. Confirmation bias. This can lead traders to seek out information that supports their existing beliefs and ignore information that contradicts those beliefs. So consider all available information. Don't be influenced by preconceived notions. So recognizing biases, steps to take. Be realistic about your abilities. Set realistic goals. Stick to your plan. Be disciplined in risk management and seek advice and guidance from other traders. So mindset. Mindset is everything. If you don't have the positive mindset, a good mindset, your trading will be below par. So it takes resilience, patience, and exercise. I mean, resilience, you have to be able to get back into the market after you've had one or two or even maybe three losing trades. You don't want to be able to pick up the computer and throw the computer out the window because you're so upset. You have to have a lot of patience when you're trading. You have to wait for the market to come to you. Wait for a good setup to enter a trade. You have to have a lot of focus, and I put exercise here. And why do I put exercise? Because exercise benefits all traders and investors. It keeps the mind sharp. For this type of trading, if you're doing especially short-term trading, day trading, it's essential to have very good concentration, better mood, stress reduction. It releases hormones like dopamine and serotonin, which help improve focus and concentration. It even aids in impulse control and planning and fear management. So if you don't have an exercise regime and you're a trader and an investor, I highly recommend taking some exercise up. So wait for the market to come to you. So there's going to be a theme in all these quotes here. So trading is 10% buying, 10% selling, and 80% waiting. And Warren Buffett says the stock market is a device for transferring money from the impatient to the patient. And if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. So your responses, whether you win, lose, or draw, your responses should be the same. You control your behavior. Make sure the action of trading and investing doesn't control you. The markets really don't care what is happening in your life. So it's a really great idea. I did this and I still do this. Have a handwritten record of your trades and investments. So you put the date, the trade, the investment, or the trade, and whether you win or lost, and why it worked or didn't work. Oops. So the benefits of writing things down. Writing compels you to organize your thoughts, and it boosts connectivity between different areas of the brain, so you will retain the information a lot better. So I always started with, that was good because. So if you lose, you are learning something from your loss. If you profit, you understand and reinforce what you did well. So losing per se is not bad. It's actually part of doing business in the markets. It is a lesson, store it. The more lessons, the better you will become. So what are your rules? What's your plan? Are you going to trade every day? What time of day are you going to trade? What strategies are you going to use? What sector are you going to trade? Are you going to trade all sectors, just one sector, like bonds or the tech sector? Or are you going to just trade a single stock? Are you going to trade, be open to all stocks in the market? So what time period are you going to use to enter the trade? Know when your exit level, when you place the trade. You can have more than one exit level, of course. How do you exit? Do you take half off and let the other half run to a secondary exit level, or do you take all profits? Where are you going to place your stop loss? I place mine just above resistance or just below the support level. The size of the trade you're going to put on. I always recommend to start small, and you can accumulate over time and average in. This is if you're buying stock. But be careful, be really careful not to get cocky, especially after you've had a very successful run at your trades. And don't add too many trades. You must be able to manage your trades. So reading the charts, identifying patterns, using moving averages, the RSI, candlesticks, and time periods. So trade with the chart, not with your heart, what you want to see in the chart. So the best chart patterns to be able to identify are head and shoulders, double top, double bottom, rounding bottom, cup and handle, wedges, planets or flags, ascending triangle, descending triangle, symmetrical triangle. So here's a head and shoulders pattern, and this is the neckline. So you could put an entry order down here for the trade to be taken, and it's a potential bearish trade here. Here's a double top, and here's the neckline. So once again, you could put an entry order here, and it's at a potential bearish trade once again. Here's a flag pattern. You could put your entry order up here. So when the price continues and breaks out of that flag, it continues in an upward trend. Cup and handle, same thing. You put your entry order here to be taken after it breaks out of this handle. And the triple top, 2 points makes a third. This is what I call it. And drawing your line here, you're putting your entry order here just below the neckline, and the trade will be taken as a bearish trade. And you could put your target, take profit targets here, and then you don't have to think about where you're taking your profit off, and of course enter your stop loss here. Candlesticks. It's handy to know some candlesticks because it helps you identify what may happen in a chart. So the bullish direction candlesticks include inverse hammer, hammer, bullish engulfing candle. The bearish ones include hanging man, shooting star, bearish engulfing candle, and spinning top. And we can also identify dojis or spinning top as continuation pattern candles. This is by no means a complete list of candlesticks. There are many, many others. So this candle, what do you think this candle is? It's the potential direction is bearish. So this is a shooting star and a hanging man. So it just looks like a hanging man, the body and then the head. So the potential direction is bearish. So what is this candle called? This at the bottom of a trade, bottom of the market here, this can be a hammer. and this is inverse hammer. So the potential direction is bullish. So what is trading about? It's about patience, emotions, and risk management, but don't expect every trade to work. Learn to accept losses too, because that's part of the business of trading. So my SPY target for the short term is 5,485. This is the S&P weekly chart. And after a retracement, we will continue our up move towards this target number. So Dow Jones here, and we've had a bit of correction here, and we may even have a correction down to 37.5 or even 37. So just be wary that that could happen, or we could have some volatility and sideways movement. And these are my targets going forward. This is the NASDAQ weekly chart. We had this nice pullback here to the 20-day moving average, and we're still heading up. But these are my targets going forward, and we should go beyond 20,000. But of course, there will be volatility, especially going into the seasonal period, the summer period that is upon us. So precious metals. The expectation for rate cuts has sent metals on a bullish tone. Stocks have started to bounce as they play catch up. There's a shortage in silver developing. Demand was up 16% in 2023. Gold is heading for 3,000 by 2025 at least, but of course will show volatility on its way to this target. Collapsing interest rates will be the story for 2024, and we should start to see at least one rate cut in the second half of the year. This is the gold monthly chart, and we should see a pullback to maybe 2,250, and then we will continue on with the bullish move in gold. The next target is 2,530. So we all remember what happened in 2008 with the launch of QE by the central banks. And what happened after QE was launched? There was cheap and abundant money, and it really worked very, very well, didn't it? And it created a bull market in everything except for precious metals. And what was the consequence of the QE? Markets, consumer lending, and property values surged. Oops. And then also what else surged was debt. We got lots and lots of debt. So today, by 2050, every American will owe $226,263. And by 2060, debt is projected to reach 185% of gross domestic product. And you can see it as compared as in a historical analysis, but right back to 1900, where we are in America. So the price of gold and silver did not reflect a world with cheap and easy money, but their time to shine is now here, and we are in a bullish cycle. So the factors influencing a higher silver price in the future will be insufficient investment in mining production, mine closures, and increasing operating costs manifesting themselves in market prices. Major mines forecast a reduction in silver supply. New technologies will equal more demand for silver. So the silver is set for a breakout, and it has broken out of this 12-year breakout line, this 12-year resistance line, and we've had this breakout now. So the bullish market in silver has many years to run. This is the weekly silver chart, and we've clearly broken up very strongly above this resistance line here. We got this retracement down to 30. We might bounce around here for a little while, but then we will continue up in a bullish move up towards 34.80, the initial target in silver. So the silver 10-year price forecast in a commodity bull market. So here's the long-term forecasts. You can see here in 2025, it could be around 120. In 2028, it could be over $1,000. So the projections are massive. So, you know, saying we have many years to run would be an understatement. The 2024 silver price predictions by Jacquie Morgan Commerce Bank was $30 in 24, which we have already reached. Investing Haven predicts 34.70 to 48, and Robert Kiyosaki has gone right out and predicted 500 by the end of 24. So declining silver production equals scarcity, and when something is scarce, the value of it usually increases. So silver is not just for jewelry. It has very major industrial uses, and there will be growing demand for this precious metal in the future. So industrially, 49.4%. That's where the demand is here, mostly in industrial, and part of that comes with solar. And of course, silver is used in EVs as well. 26, just over 26% goes in bullion, and just over 17 in jewelry, and then some in silverware and photography. So there'll be huge demand with renewable energy. So that's where another big demand will be with solar panels. So the future of silver in growing sectors, there'll be applications in tech and batteries, and this will drive demand higher. So ways to invest in silver. You can buy silver coins or silver bars. You can purchase silver ETFs, such as the iShares Silver Trust, SLV, or the SILV. You can purchase silver futures contracts, or you can purchase the stock Wheaton Precious Metals. But what about gold? Central banks have been buying gold for the last couple of years. I mean, in 2023, probably net of 800 tons was bought, and this has continued in 2024. I mean, in the Central Bank of Russia just last month bought 3 tons. The Czech National Bank bought 2 tons. The Reserve Bank of India bought 6 tons. And from 2022, October 2022, China, for 17 months in a row, bought tons of gold each month. But they've just started to slow down just last month. So why gold? It's a hedge against high inflation. It protects against volatility. It is also a safe haven asset against geopolitical uncertainty and economic crises. It surges higher with imminent rate cuts, and when the US dollar falls, the gold will still rocket further. So the Fed cutting cycle and falling US real yields will once again become the mono driver behind gold's breakout rally later in 2024, says Gregory Shearer, head of base and precious metals strategy at JP Morgan. So the gold price direction. So let's pick out a couple of dates here. In 2025, we will see it at 3,449. These are just predictions. By 2030, it could be at 9,000 plus. By 2032, it could be nearly 11,000. So this is the monthly chart of gold going way back to 2004. Okay, you can see here, this is when all asset classes surged from QE, but gold and silver took a rest and didn't surge. Okay, so now, as we're seeing, now is their time to shine. Okay, this is the GLD chart and it's rallying well. So I would suggest, this is the weekly chart, I would suggest scaling in to the stock here on pullbacks, and just buy small parcels every time it pulls back or every time it goes up. And you can also, when it pulls back here, you can also go into leaps, a one-year leaps, either in the money or at the money, or if you're very aggressive, you can put it out of the money. Okay, this is Barrick Gold. I got my subscribers into Barrick Gold in February, and at about $14, around $14, $14.75, and they're also in one-year leaps on this stock, and the target is $50 here. So once again, scale in on pullbacks. Wheaton Precious Metals, a similar story. And I was telling my subscribers to start scaling in October last year. So all these pullbacks here, I was telling them to scale in. SLV, similar story here. After a great big sideways movement, it's taken off like a rocket. And once again, on these pullbacks, these great opportunities, scale in here. GDX, a similar story. After a big sideways move, we got a big upside movement, and it's pulling back now after a huge bullish run. Energy and commodities. After 3 years of volatility, commodity prices are set to broadly stabilize in 2024. We've had adverse weather conditions, escalating geopolitical tensions, and soaring shipping costs are among the risks to watch. US gasoline prices hit a 20-year low at $1.61. So you want to watch ExxonMobil, Occidental Petroleum. These are great buys, as are Caterpillar and Freeport-McMoRan, which is a play on copper. And these two really are great long-term holds. And they're actually at great prices at the moment. This is Cameco, CCJ. I got my subscribers in around, was it around April? Yeah, in around here. The US is a major buyer of uranium now, and they're restarting plutonium production for the first time in 20 years. So on any dips, you should be scaling in to this stock. It's a great long-term hold. Occidental Petroleum, you could be scaling in here. We've had a very nice pullback here, and Buffett's a big buyer of this stock. Same with ExxonMobil. It's come back for a rest after a very big rally here. And once again, I got my subscribers into this stock at 102.20, and they're also in one-year leaps on this stock. So my stock portfolio for my subscribers, this is from January this year. I've recommended all these stocks. They're all in positive territory. I recommended, for example, NVIDIA at $549. It's now $1,224.40. Meta, I recommended at $360. It's now $495.06. It's another one, CrowdStrike, recommended at $280. It's now $342.18. Salesforce recommended at $260. We sold it to $278 just before the earnings report. where Salesforce crashed. Spot recommended at 193, it's now 324.75. Okay, we sold out of United at a profit. We're still holding Delta and BlackRock. Netflix, we got in at 480, it's now 650. Boeing is the only one there underwater. And here we got on the 19th, we got into Berkshire 362, it's now 409. And we're in biotechnology shares here. We got out of Humacyte at 721 and got more than a double as we got in at 319. And we've just got two here a little bit underwater, but I'm holding them. Okay, so a little bit about my background. Oops, sorry. Okay, so this is me here, and this is my 18-year-old son, Alex. Okay, so as John told you, I worked in a psychiatric unit in the trauma-based hospital, and it was also connected to a drug and alcohol unit. And I did that for 10 years, and I studied while I was working, and I finished with my MBA. And as John said, my mother was an enormous influence on me in relation to learning about the markets and finance in general. I mean, for example, she used to give me certificates. She used to buy parcels of shares and give me that for my birthday and Christmas instead of a normal T-shirt or, you know, track pants or whatever else you might be bought. I mean, at the time, as a teenager and, you know, growing up, I didn't think that was really exciting to get that. But now I think it's very exciting to have those in my bottom drawer. So I'm a qualified teacher, and I've been teaching part-time for 30 years. I still do it now. I've run my own fund. I've worked for John since 2010. And I've also had a stint in the outback of Australia as a jillaroo, or what you might call in America a cowgirl. So with some of my profits, I've poured it into education. That's what I really believe in. And I sent my son to a private prep boarding school in the UK. He was 8 when he started and 13 when he finished, and he absolutely loved it. These were the fees that I paid 3 times a year, £9,364 sorry. And all the terms added up to about 60,000 Australian per year. So this is when we were holidaying from his holidays from school. We went to various places around the world. This is in Lake Tahoe. He's on the beach looking out the beautiful snowy mountains in the distance. It was a beautiful autumn day. So I travel around the world. Here I am in Switzerland, up in the Solomon Islands, showing my son how the other half live, and in England, beside the Thames, checking my trades. This is where I come from on the Gold Coast. We have the most beautiful beaches, and this is up in North Queensland in Mackay, where you cannot swim without a full body suit because there are deadly jellyfish and also crocodiles. So, can you manage your money on your own without direction? I guarantee you the next 10 years, the investment space will look very, very different. So will you be able to identify the winners from the losers? Do you have access to the latest market updates, or would you like some help? And I really love 3 of Warren Buffett's best investing tips. When you buy a stock, plan to hold it forever. Most news is noise, not news, and the best moves are usually boring. So the sad truth is most traders fail. Only 7% remain after 5 years. The markets are unforgiving, and emotional trading always results in losses. And it doesn't know you exist. So you can do nothing to influence it. You can only control your behavior. That's why psychology is so important in trading and investing. So this is the stock market over the past 90 years. You can see 65 of those years were positive and 24 were negative. And you had a median annual return of 14.32%. So not bad over that period. So it's about time in the market rather than timing the market. So between 1975 and 2000, the stock market rose 2,300%. So there've been two secular bull markets since 1929. So here and here. So if the current cycle generates a similar rally of this amount, the S&P could move towards 14,000 by 2034, which is when we expect the current 16 to 18-year secular bull market cycle to peak. So who would have thought in 1975 we would move up to this area? So no one will think at this time, 2009, we could possibly move to this area, but it is possible. And something that may help that along is technology. I mean, we're in the middle or at the beginning of a new industrial age with AI, and it will be an absolute supercharger. It will impact all sectors: health, finance, transport, agriculture, housing, retail, everything. I mean, we'll have flying vehicles, which are actually due to be released, I think, by a Chinese company in the next couple of months. Anti-aging drugs, can't wait for those. Miniature AI, teleportation, now that will be fascinating. Quantum internet, space mining, and the advances in medicine will be amazing. I mean, we'll eventually be able to go down to the corner shop and buy some drugs to get rid of our cancer. So the potential for the world is incredible. So how do you benefit from Jacquie's post? You get up-to-date information on the market, the economy, and geopolitical events, 3 newsletters a week. And you will get to learn about stock market terminology. I mean, you don't have to worry that you don't know what any of these things mean. You will learn as you go, and I will teach you. So John holds a webinar once every fortnight, and I summarize the main points and send it out in a post. So you will get trade ideas from me as well, and an explanation of why the trade is a good idea. So recent recommendations have been Arista Networks, Advanced Micro Devices, Marathon Oil, and CrowdStrike, which has just had a very good earnings report. We have leaps on Microsoft, Barrick Gold, and ExxonMobil at the moment, and they're all in the money. And we've just put a leaps trade on General Motors. I hold a Zoom monthly meeting once a month, and it's usually at the end of the month. And it brings subscribers together and connects the community, where you can ask me questions, ask each other questions, bring up ideas of trades, or just discuss the economic landscape and geopolitical situation as a group. So I've just held my Zoom monthly meeting last Friday. I hold social events twice a year, and this was in Melbourne in January 24, and we had a great group for lunch there. This is a testimonial from John Morrison in Australia, who's an accountant. I have known Jacquie Munro for a period of over 7 years since I first met her at a Sydney luncheon with John Thomas. At that time, she became known as the John Thomas Mad Hedge Fund Trader contact person in Australia. She was very helpful in assisting me access to the various trading platforms that John Thomas uses to trade his trade alerts. I joined Jacquie's post from day one and attended many of her Zoom conference calls. I found Jacquie to have an excellent knowledge of all financial markets and has a friendly, plain-speaking way of explaining the various market opportunities. She talks from experience and will educate you how to shut out the noise and focus on the opportunity at hand. Jacquie has guided me through many successful trades that I'm forever grateful and hope that one day I may well emulate her financial success journey. I can highly recommend her to any investor, whether experienced or just starting out. Thank you, John, for that. So what will you receive with Jacquie's post? You will receive 3 informative newsletters a week, a summary of John's webinar presentation sent out once per fortnight. Trade investment ideas will be shared when the risk reward is in your favor, monthly Zooms to educate, share ideas, experiences, and ask questions, and twice yearly social events in different parts of the world. So your price for today only is $3.97 for 6 months, and you will get a free trade alert as well if you buy today. So click on the link in the chat box on the right. So here is the mystery chart. Can you guess what this stock is? I mean, is it a buy or is it a sell? If you purchase my product, you will receive a trade alert on this stock direct to your inbox. So take a step and change your life. $3.97 for 6 months. Click on the link and take the opportunity to do something different. Take the opportunity to step out of your comfort zone. Join our community and learn about the markets, how to make money and boost your income. And we have great fun. So one last thing I'm going to share with you are some life lessons here. So if you win in your mind, you'll win in reality. The greatest disability is in your mind, not in your body. So if you think you can't, you definitely won't. If you think you can, you will. So instead of being obsessed with money, be obsessed with freedom. Don't chase money or you will be trapped. Your comfort zone is your enemy. Don't burn your opportunities for a temporary comfort. So I'll go back here. So take a chance, take a step, change your life. $3.97 for 6 months. Click on the link in the chat box on the right. I'm going to just have a look at some in chat. Any questions here? Okay. Okay, so we've got a question here. What does it mean to pyramid out of position? So I use the term scale in or pyramid in, which is buying small parcels of shares at different price levels. And when you pyramid out, you're taking small parcels off. So you're not taking the whole position off at once. You're coming out gradually. Matt says, thank you, Matt. You are outstanding and relatable. Thank you very much. Okay. Okay, can't see any. Okay, so the $3.97 offer is once you purchase and pay $3.97, that's good for the long term. So the price will never change. It stays the same. What happens if something happens to you? Do you have a backup for your site? Yes, there'll always be a backup for my site. I'm going to start producing recordings and also trainings for my Jacquie's post, and but you won't replace me. I mean, when I'm gone, I'll be gone. So that's the sad fact. But the trainings and recordings I will put up to teach you what I know and how I trade the market will always be available. So if you follow those recordings and those trainings, you'll learn. If you're consistent and don't give up and you've got resilience and you follow your plan, you'll do well. I mean, it might take a bit of hard work, you know, a bit of learning, but you will get there. Okay, John, it's nearly 5 minutes to the hour, so I will hand it back to you.
All right, Jackie, outstanding as always. See, you have a lot of interest here. Our traffic has actually gone up since you started speaking. So that's always a good sign. And thank you very much for joining us. Again, to take advantage of Jackie's offer, click the chat box on the right. You see madhitchfromtrader.com. That'll take you to the dedicated sales page and Jackie's discounted offer.